Hi there. If you miss your company's tax deadline, you can face heavy penalties. We will explain how to pay it.
Hello and welcome. Now, if you're running a limited company here in the UK, listen up, because the way you handle corporation tax is about to get a major shakeup in 2026. To make sure you've got the most accurate, up-to-date information, we've put this whole guide together with the expert tax advisors at My Tax Accountant, one of the UK's most trusted accounting firms. Okay, let's get into it.
Right, let's kick things off with a number I really want you to think about: £2,000. From April 2026, this is what a simple admin mistake like filing your tax return late for the third time could cost your business in fixed penalties from HMRC. I mean, that's a serious chunk of change for any small business, right?
So that leads to a really big question. And look, this isn't about scaring you, it's just the new reality. Is your business genuinely ready for what is the biggest penalty hike we've seen in a generation? We're going to walk through everything today to make sure your answer to that is a confident yes.
Okay, so here's how we're going to break it all down for you. We'll start with that 2026 tax shock. Then we'll do a quick refresher on the basics of corporation tax. We'll look at what's new, nail down those all-important deadlines, talk about the common traps to avoid, and then finish up with your next steps.
All right, first things first. Before we jump into all the new stuff and the changes, let's just make sure we're all on the same page with a quick refresher on what corporation tax actually is. It never hurts to go back to basics.
So in a nutshell, it's the tax your limited company pays on its profits. And, it's not just about the money you make from your main business activities, like selling your products or services. It also includes something called capital gains. That's the profit you make if you sell a business asset, like a company vehicle or an office building, for more than it cost you.
Okay, now this is where it gets interesting, because there isn't just one flat rate for everyone. For 2026, it's a tiered system. If your company's profits are £50,000 or less, you're on the small profits rate, which is 19%. If you're a bigger player with profits over $250,000, you'll pay the main rate of 25%. And what if you're in that gap between the two? Well, that's where something called marginal relief comes in, and it basically creates a sliding scale that smoothly takes your tax rate from 19% up towards 25% as your profits increase.
You'll definitely want to hear this part, because this is something that catches so many people out. Those £50,000 and £250,000 thresholds, they're not always set in stone. If you also control other companies, they're considered associated. And if you have, say, just one other associated company, those thresholds get cut in half. It's a massive trap that can push you into a higher tax bracket way sooner than you'd expect.
Right, let's get to the real heart of it. Why are we talking about this today? Well, it's these significant changes coming in 2026 that are going to have a direct impact on your company's bottom line. These are the details you really cannot afford to ignore.
And here it is, laid out plain and simple. From April 1st, 2026, the fixed penalties for filing your corporation tax return late are literally doubling across the board. Just 1 day late goes from £100 to £200. Do it 3 times in a row, and that £500 penalty becomes £1,000. And if that third one is also over 3 months late, well, that's where you hit the £2,000 penalty we mentioned at the start. HMRC is making it crystal clear. Getting your paperwork in on time is not optional.
So you're probably thinking, whoa, where did this massive jump come from? And that's a fair question. Well, believe it or not, these penalty levels haven't actually been changed since 1998. Yep, you heard that right. This big increase is really just HMRC playing catch-up, adjusting the fines for nearly 30 years of inflation to give them the same bite they had back then.
Okay, but it's not all doom and gloom with penalties. Actually, there's some potentially really good news here too. The government has rolled out a big overhaul of business rates for 2026. This means lower multipliers. That's the figure used to calculate your bill, which is great. There are also new caps to stop bills from rocketing up after a revaluation, and, really importantly, targeted relief for those sectors that have had a tough time, like retail, hospitality, and leisure. For a lot of businesses, this could mean some very welcome savings. Okay, so you know the rates, you know the penalties, but how do you actually go about paying? Stay with me here because this next part is absolutely vital for getting things right, and honestly, it's where most people get tripped up.
Let's make this dead simple. If you remember just one thing from our chat today, make it this. The deadline to pay your tax bill is months before the deadline to file your tax return. They are 2 completely different dates. Getting them mixed up is easily the #1 mistake people make. And this timeline just shows it perfectly. Let's use an example. Say your company's year-end is the 31st of December 2025. Your deadline to pay the tax you owe is 9 months and 1 day later, which is the 1st of October 2026.
But you then have a full 12 months, until the 31st of December 2026, to actually prepare and file the return. It's that 3-month gap that catches everyone out.
Right, another absolutely crucial point. Before you even think about sending any money to HMRC, you need to find this number. It's a 17-character reference, and it's unique for each accounting period. If you don't use it or you use the wrong one, HMRC's system won't know where to put your money, and you'll start getting scary letters or even penalties, even though you've paid. You can find it on the notice to deliver a tax return that HMRC sends you.
So, let's just break it down into 4 simple steps to get it right every time. 1. Find that unique 17-character reference. 2. Pick your payment method. 3. Give the payment enough time to actually clear. Don't leave it to 5 p.m. on deadline day. And 4. Always log into your HMRC online account a few days later just to double-check they've got it.
And this is exactly why you can't leave it to the last minute. As you can see, not all payment methods are instant. A faster payment from your bank, that's usually there the same day. But a Bacs payment takes 3 working days. And if you're setting up a direct debit for the first time, you need to allow 5 working days. If your deadline is a Friday, making a Bacs payment on Wednesday is probably already too late.
All right, we've gone through the what, the when, and the how. Now let's talk about the what not to do. These are the simple, common mistakes that can trip up even savvy business owners. And with those new penalties, the consequences are more painful than ever.
Let's make this feel real for a second. Just picture it. A brilliant little startup in Birmingham. They've had an amazing first year, but it's been absolute chaos. It is so easy for the tax return to get pushed down the to-do list. But in 2026, that delay is no longer just a small sting. For a growing business, a £400 or £1,000 fine isn't an inconvenience, it's a serious blow that can eat up your entire marketing budget for a month.
So, to wrap this section up, here are my top 3 costly mistakes to watch out for. Please burn these into your memory. Number 1, forgetting that all-important payment reference. Number 2, mixing up the payment and filing deadlines. And number 3, this is a big one, thinking you don't need to file a return because you made a loss or broke even. Wrong. HMRC still demands a nil return, and all those late filing penalties still apply even if you owe 0 tax.
Phew, we've covered a lot of ground, haven't we? From the rates and the penalties to the deadlines and the common slip-ups. So what does this all mean for you? What should you be doing right now to make sure your business is safe, secure, and ready for 2026?
Okay, just before we wrap up, a really important bit of housekeeping. Everything we've talked about today is for general guidance. Tax law is incredibly complex, it changes all the time, and your business has its own unique situation. So please do not rely on this information alone to make financial decisions. Always get professional advice first.
And look, the main thing to remember is that you absolutely do not have to figure all this out on your own. For professional advice that's tailored specifically to your business, we really do encourage you to get in touch with the experts who help put this guide together, My Tax Accountant. They can make sure you're compliant, efficient, and ready for whatever 2026 throws at you. Their details are right there on the screen.
And finally, if this has been helpful and you want to stay ahead of the curve, please do consider subscribing to the My Tax Accountant channel on YouTube. Thanks so much for watching. The real question to leave you with is this. With these changes on the horizon, are you treating your tax compliance with the seriousness it now demands?